Thank you very much for coming. My name is Darren from Tax. I'm a tax advisor, and this is?
My name is Michael Dye. I'm a U.S. immigration lawyer, and we're based primarily in California. We have an office here in Dubai as well. I'm back and forth every month, and so we handle all U.S. immigration.
And then our team would help with pre-immigration tax planning, and then once you actually make the move, compliance to actually doing the tax returns in the U.S. and any other jurisdictions to which you may be exposed. Well, yeah, I mean, the U.S. is, we were saying earlier, that there are points of view that the U.S. is the biggest destination for, let's say, privacy. I won't say money laundering, but or bank secrecy or tax evasion, but definitely for privacy, because most other jurisdictions in the world have signed up to the automatic exchange of information, or CRS. So when you open a bank account here, they'll ask, I mean, when you go online with Mashrek or whatever, one of the questions asked is, where else are you tax resident? So that's not just in the Emirates, that's most jurisdictions. Even in China, even in Russia, they've signed up for this automatic exchange of information. So depending on which jurisdictions you mention when you open your account, they are more or less required to report your bank or financial activity back to the other jurisdictions to which you're exposed. The US didn't participate in that. So the US has something called FATCA, the Financial Account Tax Compliance Act, and that is more or less one way. So, for example, the UAE would go through its accounts because, again, looking at the process for opening an account here in the UAE, which is no different from anywhere else, right? They ask you two things in the international side. Are you a US taxpayer? And then separate to that, what other jurisdictions are you tax resident? Are you fiscally exposed? Because the US has to get its own question because it's like a special circumstance. So they automatically report your bank activity back to the US, but the US does not reciprocate generally. So that is the first advantage, to your point, privacy. So as a non-US taxpayer, you can open an account, you can invest in whatever you want, ETFs on stock market, and it would, generally speaking, be private. The second advantage is there are fiscal incentives. Generally speaking, capital gains are tax-free. So if you were a U.S. taxpayer, you pay tax, depending on how much it is. It could be up to 23.8 for long-term capital gains, or ordinary, or if it's a short-term capital gain, it tops off at 37% plus states. So it could be up to 50% plus, depending on where you are and what you're doing. But if it is that you're not a U.S. taxpayer, free. There are exceptions such as real estate, but equity, which is what a lot of people are interested in, it is tax-free. So the U.S. is, of course, the biggest financial market in the world. So when you add that up, it is quite attractive to non-Americans. And a substantial part of our practice is for non-Americans who are exposed to the U.S. tax system by virtue of investments, because it is attractive.